Okay, the podcast set up downtown. We got motion. What's the idea? People, the conversation's open. Lee Andrews Group, the firm, yeah, we here now. Let's talk about great ideas. Have a sit down. Welcome to the podcast, the Idea People.
Hello and welcome to the Idea People at Lee Andrews Group. Lee Andrews Group is an award-winning communications firm located in the vibrant heart of downtown Los Angeles. Each and every episode, we hope to feature industry newsmakers, trends, and an assortment of ideas that might get you thinking. Hello, everybody. I'm Rick Garcia. And the question I have for you today is, have you ever thought about selling your yard? Now, I know people think about selling their house, but have you ever thought about selling like part of your yard? I mean, it sounds like an unconventional idea, but in the face of our current housing crisis, it could be a game changer. Imagine being able to keep your home while selling a portion of your yard to address both your financial needs and possibly even contribute to solving the housing shortage. And it's not just an idea, it's a tangible opportunity that's now accessible thanks to the Home Act in California. And here to discuss with us is Matt Lucido. He's the CEO of Yardsworth. Welcome to the Idea People, Matt.
Thanks for having me. Glad to be here.
So, I mean, this is kind of a new wild way that people can contribute to many things, their retirement, their savings, helping our affordable housing situation. First of all, this all spawns from Senate Bill 9. It's also known as the Home Act. Can you tell us how that works?
Yeah, so let's start with the why. Why did California SB 9 or the Home Act actually, come to fruition, up in Sacramento? And the reason really is that the state, requires 3.5 million new housing units or new homes to be built, and they have a 5-year goal, and they're quite frankly fallen short of it. One of the tools in their tool belt was to pass a law that would actually enable homeowners to split their single-family properties into 2 unique lots, so that new homes could be built, typically in the backyard lot, because the home is usually in the front yard. Very novel, very new. We just happen to have in California, and certainly in Los Angeles, a lot of large rectangular lots with significant backyard space. And so the state identified that as a development opportunity. And here we are today with this kind of unprecedented ability for a homeowner to cash out some of the hard-earned equity in their homes in order to make way for new permanent housing.
Now, that sounds like a subdivision. Is that what that is? And can you explain to folks, what a subdivision is?
Yeah, so SB 9 is effectively known as the Home Act, but it's really a lot split bill or law. And so it is akin to a subdivision. You're actually subdividing, a residential zoned property into 2. So you are subdividing it. The difference is with SB 9 is, unlike a traditional subdivision, you probably think large subdivision, cookie cutter homes getting put in very close together. This is done on a very individual basis with each homeowner that wants to participate in the program. And so you're not going to see the density of homes built through this new law like you would in a typical large subdivision project. So you're not chopping up neighborhoods and putting in large apartment buildings or 4-unit apartment buildings next to 5-unit apartment buildings, et cetera, et cetera. This is just building new homes in neighborhoods where folks largely have been experiencing high growth and equity appreciation. A lot of these homes have grown in value.
Yeah, a lot. I mean, we know that as much as the federal government's trying to slow down the rise of home prices, it hasn't been effective yet. I mean, I don't think we're in a bubble. I'm not sure. We never really know we're in the bubble till it bursts, right? And that's when we find out the hard way.
Yeah, that's right. Particularly in California, we're a bit insulated, at least in markets like Los Angeles, from some of the downturns and down cycles we've seen with the housing market and home valuations. Right, even in 2008, we saw a bit of a dip, but it bounced right back very quickly.
So you split my lot.
Mm-hmm.
First of all, what's size? What are the parameters in terms of lot size in order for me to be able to do this?
So let me zoom out for a moment and just say that any homeowner in California can split their lot through California SB 9. Yardsworth, what we do as a company is we actually give you a sign of value to your property. So we give you what your yard is worth. And then we make a cash offer on that land so that you don't have to go through this whole process on your own. Because it does cost a pretty significant amount of money to actually just split your lot with your city. And these are fees that go to the city. These are third-party, surveyors and utility consultants and land use consultants that you have to hire in order to prepare a lot split application to the city. So if you wanted to split your lot, really there's only a few things that need to be in place, and a couple of them are requirements for the state law, and a couple of them are for us. We look at in order to be able to actually make a cash offer on a piece of backyard land. The first is it has to be owner occupied. So if you have an investment property, the state is just not going to let you, split it and build on it. This is to keep homeowners in their homes for as long as possible, right? The second one is it has to be zoned as a single family home, right? If you already have a duplex or it's zoned multifamily or commercial or hybrid, it just doesn't work. Again, this is about homeowners staying in their homes, staying in their communities. And then what we look for at Yardsworth is, other than those few things per the state requirements, are very simply that there's just a big enough space in the backyard to support additional housing. Because, of course, that's the whole goal of the law, and that's what we do as a business, is to get homeowners paid substantially for ideally unused or underutilized land, and then build a new small home in the rear.
So a small home goes in the rear, and what about access to that home?
Yeah, so typically the access will come via a fenced-off private path on one side of the home, and of course the new home will be built behind a privacy fence as well. So, our goal is to, other than the financial benefits that we can offer to homeowners, is to keep sort of status quo with their lifestyle. Right, we want them to have private backyard space after the lot split. We want them to have side yard space, and we want them to feel like they just don't have neighbors living in their yard. Right? Really, what we like to say is your back fence will come in about 30 feet, and you just replace your old neighbors in the back with new neighbors in the back.
You're listening to The Idea People. Matt Lucido, CEO of Yardsworth, is our guest, and we're discussing how you can sell part of your land that your house is sitting on. You don't have to give up the house. You still get to keep your house. You'll have a yard, but you're going to sell out part of the lot. It's going to help with the affordable housing crisis. This is something being done through Senate Bill 9, also known as the Home Act. And Matt's company, Yardsworth, can help you do that without the headaches. Anything that involves real estate or building, whether you add a bedroom, it's a process, man, and it is a pain. So does the homeowner, if Yardsworth comes in, what's the homeowner's involvement in this process?
Well, first, let me just say that any homeowner can go to our website, yardsworth.com, and much like you can do on Zillow and get your Zestimate, your home value, you can come and get your Yardsworth at yardsworth.com just to see what your backyard is worth.
By the way, can you give us a range? I want you to continue with that thought, but give us an idea. We haven't talked money yet. What's the range of?
Yeah, of course. It usually starts at around $100,000, and we've gone as high as $200,000.
Okay. I didn't know if you're going further with that thinking about how you guys are going to take the headaches away, right? Like you get the headaches, the homeowner
that's
takes
right.
the money.
So the whole idea is that this is a debt-free alternative to tapping your home equity, and potentially building something in your backyard. A lot of people in California are aware of accessory dwelling units, or ADUs, and there have been a lot that have been built. But what folks don't know that haven't done this yet is it's very expensive and very time consuming to actually, develop additional real estate in your backyard. And so we're talking, minimum probably $150,000 that you're going to have to go out and get financing for. In this market, rates are really high. That's tough. And you're probably looking at, 18 months of, design, permitting, and construction before anything is built in your yard. And so when a homeowner is looking at an ADU as an option to put in their yard.
ADU
meaning accessory dwelling unit, right? This is a granny flat or a mother-in-law suite. Decades ago, these were above garages, right, where you'd have your in-laws come and stay. Today, a lot of homeowners are building them as rentals. But in the face of high interest rate debt and the prospects of managing a tenant and dealing with maintenance costs and all these things, they're coming over to Yardsworth and saying, take that headache away from me. I'm going to give up roughly the same amount of backyard space when I'm building a rental in my yard. Instead, I'll sell it and capture, call it 10 or 20 years of rent up front in one lump sum. That's much more tax advantageous and takes the headache completely out of building a structure or managing a tenant.
I would think it beats the heck out of a second or third mortgage too, right? Because you've got to pay that back with interest. In this case, this is not a loan.
No, this is not a loan. This is a simple one-time transaction. We basically are becoming your new neighbor, right? Until we build a new small home and put a long-term tenant in there or sell it.
You say we, you're not going to live back there, are you?
You never know. Maybe.
It depends, right?
Yeah, it depends.
How did Yardsworth come about? This is a real interesting concept. Is this a law creating a business, or helping create a business, or is this something where you'd thought about this for some time?
Well, I guess it makes sense to start with sort of my story. I'm a West Los Angeles guy. I went to USC. Fight on, go Trojans. I'm an entrepreneur and an investor, and I'm extremely passionate about housing. That sounds a little weird maybe to say out loud, but really what it means is, I'm passionate about figuring out how to make housing more accessible, more affordable, et cetera, et cetera. And so about 5 years ago, I started Yardsworth. It looked very different then than it does today. The goal of Yardsworth was to help low and middle income communities build accessory dwelling units, these backyard rentals. And so we would essentially build them for free for homeowners, and then partner with them over the long term to manage the renter and collect rents from the unit in their backyard. To your question, though, what we're doing today does look different because this new law passed. So the law unlocked this opportunity for homeowners, and what it unlocked was, these properties in LA and throughout the state. They've been tied up by zoning for 100 years, right? It's World War II, right? And now, for the first time ever, you can actually split lots and build on these newly created lots. And so when this law came about, we realized very quickly that we could have a much greater and more quantifiable social impact if we were able to put the amount of money that we can put in homeowners' pockets. And of course, we're a for-profit business. We have to make a buck, but when it comes down to it, the homeowners have to win. If they win, we win. And so that's the social impact piece is really why we made the decision to move into this market. And frankly, we're creating the market, right? That's how new this is.
It's interesting because, we hear the stories, the reports all the time of people leaving California to go to other states. I had my friends who move out, and then later on they call me and say, well, no state taxes, but guess what? My property tax bill is through the roof, when I hear them complaining about California. This is a way to keep people here, right? I mean, it solves two problems. I can put some money in my pocket, or there's my retirement. I can go travel and allow some people to actually have a place to live that haven't been able to afford a spot otherwise.
Yeah, I think that's right. There are a number of positive impacts here. I think, the number one from the state's perspective, from the government's perspective, is to keep people in their homes and in their communities. And that's in alignment with our mission and our goals, right? We are literally paying folks to stay in their homes. And neighborhoods have changed a lot over the past 10 years, 20 years, 30 years in places like Los Angeles. And so when neighborhoods start to change, I think there's a real opportunity to keep communities intact. And that's one of those things that we can accomplish, at Yardsworth, and certainly through this new law, SB 9.
Yardsworth CEO Matt Lucido joining us on the Idea People. Matt, how's a guy wind up going from North Carolina to Southern California? Was it just for the college education? A mighty fine one, I might add. But what brought you out here?
Yeah, good question. I mentioned I'm a West LA guy. I went to USC. I actually went there for grad school. I did my undergrad on the East Coast, having grown up in North Carolina, and yeah, I know your audience is saying, well, he doesn't have a Southern accent. Yeah, I used to.
That was going to be my next
it's
question,
gone
by the
away.
way.
But y'all might hear it occasionally come out.
Yeah.
But no, my folks at the time had moved out to LA. My dad's an educator at USC, and so after I graduated from college, I made the move cross country out to LA, and so I don't want to age myself here on the podcast, but
Too late.
I've been here for for a couple of decades.
We're talking about the amount of money you can make selling your backyard. The next question, when people are like, "Oh wow, I'm going to make $100,000 selling part of my lot," what are the tax repercussions of something like that? Does it work similarly to when you sell your property and there's a tax, capital gains tax involved? How does that work?
This is a great question, and it's one of the things that I'll call lucky about this law. This is something that the state legislators weren't thinking about. They're just thinking about creating housing, right? But a couple things that I want to address here. The first is that when you work with Yardsworth, when you split your lot with us and sell us part of your land, you might get a check for $150,000. But because we're only buying part of your land and not part of your home, your property value stays largely intact. In other words, you're going to get more than you give up. Unlike a home equity line of credit or a second mortgage or another loan against your home, where you might take out $100,000 and you're losing $100,000 in equity, getting $100,000 in cash plus interest. With us, you might get $150,000. Your property value might only go down by, say, $50,000 or $75,000. We can't say for sure, right, until everything plays out. The other piece is the tax implication. So technically, it's considered a return of basis, and I don't want to get too complicated on the podcast, but every property has a land assessed tax value and an improvements assessed tax value. And when you sell part of your land, you're selling part of that assessed tax value. So it's a little bit like buying a share of Google for $1 and then selling that share of Google for $1 or less, right? There will be no capital gain and therefore no taxes. Now, not every homeowner will get the $150,000, let's say in this example, fully tax-free, but the majority of it in almost every case will be tax-free, which is a huge plus.
Well, and so, I mean, the point being, though, everybody's situation is different. No matter what your investment is, it's going to be a situation where you need to consult with your accountant, right? I mean, that's the most important thing.
That's exactly right.
Yeah.
We encourage all of our, our homeowners that we work with to really try to get as educated as possible on the law, on the opportunity. And of course, we try to do our part to make sure they know, what's going to be built in the backyard, what is the profile of the new tenants or new homeowners that'll be living behind them, and how can they enjoy their yards, after going through with this transaction, because those unknowns are important to understand. The cash piece, the financial piece is really easy, right? They know what they're going to use it for: retirement, home renovations, investments, et cetera. But the unknowns are important to tackle.
That makes sense. You mentioned, you touched on property values. Is there an appraisal during the process or post process? How will that work?
Yeah, there is. We do our own sort of internal calculation of value ahead of time. So it's one of the things that goes into how we actually offer a homeowner their yard's worth, right? Their value of their land. But during the process after a customer signs up with us, an appraisal does get done. And that's really mostly because we have to work with their lender who owns the home with them, right? To get the transaction approved before we actually split the lot.
So it stays with the lender.
Mm-hmm.
Nothing changes there. No reason to have to come up with bank statements all over again and refinance.
Exactly right.
Okay.
In fact, your mortgage stays exactly the same. The payment stays exactly the same. Nothing changes at all. That's part of the goal here, is to keep status quo with our homeowners, right? Keep them in their home, but keep their mortgages intact. If you have a 2.8% mortgage today, after working with Yardsworth, that mortgage is still 2.8%. Nothing changes there.
And the difference is you're putting some money in your bank.
That's exactly right.
Yeah. Can you use that money any way you want to?
Oh, yeah.
You can invest it. You can take a trip.
It's just like selling a car. Once that money's in the bank account, you can do whatever you'd like with it. Okay. And we have a wide range of desires from our customers in terms of what they'd like to do with the cash. But that's great.
Okay. Who do you think who's a candidate in your opinion for something like this? And in all fairness, who do you think it's probably not the best idea for them?
Yeah, this is a tough question because I think it can work for just about anybody. I think I would err on the side of saying that it's probably not for you if you use your backyard in its entirety every single day, right? Because the trade-off here really is you're giving up part of your backyard space. But beyond that, we see a wide range of homeowners that are excited about the opportunity to unlock this value that they've grown over the years with their home, that's really been trapped in the backyard. We have a funny saying, right? There's value hidden in your backyard. You can dig it up with Yardsworth, right? Yeah, we see young homeowners, elderly homeowners, really anyone that is able to make good use of excess capital, whether it be for investment, retirement, renovations, new car, college funds, et cetera. Anyone that can use that type of funds, we're happy to be helpful to. Of course, there are different markets around the state and around every city where this is going to happen less often. Places like Malibu where it's very hilly, it's going to be tougher to get these things done. But yeah.
Well, and SB9, for now, it's exclusive to California. Have you heard of other model programs around the country?
Yes, this is a state program. It's a state law. In fact, it's a state mandate. So what that means is that every city in the state has to conform to the state guidelines. But like many laws passed in California before, other states and other municipalities take the work that the California government has done and uses it as precedent for some of their local laws and regulations. And so this happened with the ADU laws that were passed a few years ago, the accessory dwelling unit laws. And that filtered into Oregon and Washington and North Carolina and Florida and many other states and cities. And we believe that the same thing will happen here. But I should be clear on this podcast that we are a local company. We're LA based. We're hyper focused on serving our community, and certainly want to make sure that we have a meaningful impact here before we move outside of Los Angeles, much less outside of the state.
So if I were to call you up, and I still call people, my buddy here next to me, Sherrod, our producer, he's probably going to go online at yardsworth.com, but I want to talk to somebody. Somebody comes out to my house. Do we walk the lot together? Is there a way to kind of visualize what this is going to look like? Are there plans I get to see, or how does that work? Yeah,
so a few points to I think that are relevant here. One is you can always call us. Our number's on our website. I'll give it to you here on the pod. It's 310-905-6827, and you can talk to a real human being 7 days a week. But to the other part of your question, yes, this is I think an in-person transaction, right? We're not some tech company that's wheeling and dealing and trying to do rapid transactions. We're going to come out to the house. We're going to sit down with you in your living room. We're going to walk the property. We're going to provide you drawings of where the new lot line will be and give you an idea of the type of home that will be built in the backyard. I think that's really important for folks to understand that are thinking about doing this. We want to make sure that you're as comfortable as possible with not just the process and the contract, but really how your life is going to be impacted by this. Both with the back fence coming in and a new homeowner living in the back or a new renter, but also of course the financial piece.
And the financial piece specifically, when we talk about, you're basically taking equity out of your home, so the value is going to change. But that's
correct.
That's why you're taking money out. That's equity. And that equity goes away if you're going to put it in your bank account, right?
Yeah, that's exactly right. But again, with Yardsworth, a homeowner is going to get a lot more than they give up, right? In other words, unlike a traditional loan, you're just trading $1 for $1 with your equity. You might get $150,000 from Yardsworth, and your home value may only go down by $50,000 or $75,000. So this is actually the first product of its kind because it's an accretive product for the homeowner, meaning their net worth after doing a transaction with Yardsworth actually goes up. And that's forgetting, of course, that this is debt-free and you're not adding to your debt burden and getting, a substantial amount of cash to do with what you will.
And if things keep going the way they go in California, the equity will start building again
that's
anyway.
Exactly right. Yeah, it'll bounce back right away.
It comes back. I think it's fair to say that a lot of homeowners aren't paying attention to politics, and they're not aware that of bills like the Home Act. Do you have any advice for folks when it comes to local politics and how it can make a difference, such as Senate Bill 9 in their personal lives?
Do I have any advice on the political realm?
Less political, more about maybe the affordable housing aspect of it.
Yeah. What I would say is, and I'm not a politician, nor do I desire to be as important as they can be, and as they are. I think it's important to stay aware of how things can affect you, both at the federal level, at the state level, and certainly locally. And there's no reason not to get involved at at neighborhood meetings and city meetings. But I think the larger story here, at least as it relates to the Home Act, SB 9, right, and what we're doing at Yardsworth in terms of investing hundreds of millions of dollars in communities across Los Angeles and across California eventually, is we're really creating additional housing. And so that means that there are opportunities for new home buyers. There's my Southern accent coming in, by the way, but new home buyers in your communities. The value of the properties throughout your communities, with new homes being built in backyards, are actually going to go up. And there's going to be new rental opportunities for qualified professionals and families in these same communities. So we're able to maintain the sort of sanctity of communities, but at the same time invest in them and provide more housing.
And I guess for some folks, best of both worlds. They don't have to pack up and move. They keep the house, and they take some of that money and they're able to use it for things they enjoy. So the bottom line, this isn't just about buying and selling. It's about understanding the impact of local politics on our lives, whether you are political or not. The Home Act is proof that staying informed and engaged can yield transformative results, and your involvement can lead to a brighter future for you and your community. So the next time you step in your yard, think about the potential value back there. Don't let your property remain untapped. You can visit yardsworth.com, or if you're like me, you like to call 310-905-6827, 310-905-6827, and you can discover how much your yard is worth and how you can be part of the solution to the housing crisis. This isn't just about selling land. It's about building a better future for all. Matt Lucido, CEO of Yardsworth, thank you so much for being a part of the idea people at Lee Andrews Group. We really appreciate that.
It's my pleasure. Thank you for having me. I look forward to coming back sometime and certainly talking with anyone out there in our communities that are interested to learn more about our program, about the state law.
It sounds exciting. We really do appreciate it. And to our listeners, we thank you as well. We hope we have brought you some insight and got you thinking a little bit in today's episode of the Idea People at Lee Andrews Group. For more information about us, go to leeandrewsgroup.com. I'm Rick Garcia. Be well, everyone.
Okay, the podcast set up downtown. We got motion. What's the idea, people? The conversation's open. Lee Andrews Group, the firm. Yeah, we here now. Let's talk about great ideas. Have a sit down. We on a mission. You get the idea, people. Glad you pulled up. How you doing? Nice to meet you.